Bull and bear traps. What are they and how to identify them? Let's go. This is Dan Max at eXp Realty, aka the trading agent, with the daily stock, Bitcoin, gold, and silver market recaps. Please check out the Discord room. Link is in the description. This is Dan Max at eXp Realty, aka the trading agent, doing a little video on bull and bear traps. Now, if you know me and been following me for years on Stock Twits, TradingView, Discord, whatever, you know I am the trap master. Very good at identifying them, very good at knowing when they are happening. So let's get into that, because I think a lot of people don't know what the hell a bull and bear trap is. They know on paper what they can read, but what does it look like? Where do you typically find them, and how can you identify if you're in a trap? So why do traps form? What is usually going on? Well, what the market maker is trying to do is to trap an overextended move and get what I would say is dumb money, hot money, chasing a trade right before it's about to flip. Now that on paper, again, that sounds real easy. That seems very obvious. So where do you go from there to figure that out? Well, one of the first things you should always pay attention to for traps is realize the first direction in the trap is wrong. That first direction is the bait. That is the continuation move. That is the action that should, get retail to go, oh gosh, there's some news. Let's all pile into short gold, silver, the markets, Bitcoin, whatever, after the move has already been cooking for a while. And when I mean cooking for a while, sometimes it can be intraday. It can be all day, end of day trap, or it can be daily, weekly, monthly, whatever you want to call it, trap, where it's oversold, overbought, and when the news comes out, buy the rumor, sell the news, everybody's jumping out on the news when they really should be covering and closing their trades out. Beginner traders don't ever take profits, so they don't ever understand that. So let's jump into that, because here are some traps on gold. Gold loves to do some traps. You can see this nice. It typically, keep in mind, gold, the GLD trades only during market hours. It doesn't have the futures drawn into this, but you don't need it. I prefer to trade non-futures, because if I do, I don't sleep. So traps. So after a big up move, this gap up, that doji, indecision, that should be a red flag to you that this might be a bull trap, especially with the news retesting an old high. So there's probably bullish news, again, middle of December, bottom and then run. Keep that in mind for gold. Been talking about that for the last 2 weeks. Run, pop, trap. Well, what typically is showing here is that you had a nice up move. You had an expansion of the volume, which wasn't that great, but it didn't confirm after a decent move. So this was more of a retest, because this was actually the sell signal, which is kind of crazy. Gold can get kind of wild, but let's get into another example of, say, a trap. Now you have a down, 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 down. Well, look what happens here. You have a pop and then a retest. This is the bear trap. They're all jumping in here on this gap down. And look at this little ass candle. And look what happened. He proceeded to bounce and go higher. Now, you can see him here again. You have gap down, gap, 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 extreme. And then you have this, makes a lower low, but closes right here. So that, again, the bulls, someone had the stopping power. Boom, boom, boom. All right, here's another trap. And this is what's interesting, is these traps, and what I'm trying to, you see them a little, they're easier to see intraday sometimes, because then you can really see what's going on. You can see the formations on the daily, but you have to see them live, so you have to zoom in. So let's zoom out a little bit and check out some traps that I would think people need to pay attention to. So here, what I would consider a bull trap. The volume expanded, everyone jumped in, chop, 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 and then ultimately a fail. So everybody jumped in heavy at the highs, chopped them out, and then boom. And if you listen to what I say pop before the chop, or chop before the drop, same kind of thing. Let's find them, because that's the thing. There's usually some sort of news. And the FOMC last time didn't really say too much in that sense that I got really thinking about. But I'll find one of these traps real quick. They usually pop up pretty quickly. Okay, here's a bull trap. The stock pops on news, crushed. Bulls all jump in, bam. And so the first direction was up, real direction was down and continued down. I mean, and again, keep in mind, like these, you have to see them live. So if you're around on the Discord room for the FOMC, I will be talking about them and I will be posting about this stuff. And it's typically, here's another one, a trap. And so this is interesting when you have a retest with lighter volume and it comes right back. That one would be hard to identify, but it also would make you realize, like, hey, if you're shorting and it didn't close below it, that's a red flag for chop or possibly pop. And you see that a ton. I mean, you're going to see intraday like swinging back and forth, all sorts of things on traps. But I'd like to look for the wicks after big moves. So a lot of this choppy shit, I don't pay attention to. I mean, let's pull up the SPY, because you're going to see traps on the SPY all the time. You usually see them in the AM and in the afternoons. Power hour. All right, here's a trap. Whatever was going on in August in the market. You can see not August, December. You can see drop, the pop. We retested the low and then slam right back with volume higher. So you retested, and that's why I talk about retest a lot. You want to see, typically you see retest to iron out tops and bottoms. Boom, made a new low. Everybody's selling to think it's going to dump, and then it turns right back around. And so like being able to watch the trap, because you don't really know the trap until it's starting to close. Here's another one up at the highs here. This is interesting. You're popping, little doji, everyone popping in. Again, that's not, the volume isn't that great, so it's a little harder to see. But here's a trap. Market 3, red. Long wick. Look at the green volume here. That's a good example of a trap. I wish I would have found. I figured I could wing this and figure it out, but here's a good example of one. Down, 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 down. Look at the volume on this candle. Stopping power. Higher volume, and then the action, it popped. Like everybody was shorting and the wicks started increasing, and there's probably obviously some levels. So if we look at this, this is 1110. Yeah, here it is. Okay, you can see it on the daily. It's this day right here before we pop back up. You had that wick, and that ended up being the trap. But again, it gapped down. People thought the market was going to keep going, and they jumped in it, and then it stopped, and what happened? It reversed and went right back to the high. I mean, that's that. And so here's another trap on the daily. See this wick going over the old highs at 471 and then failing? You typically see traps before major direction changes. And I mean, you can see it right here. I mean, this is one of the more difficult ones, because we talked about this being an inside day. But look at this wick here on 12.3. It went below 451, and then what happened? You closed above it. I'm assuming with the high volume, bears are short and expecting the 100-day. They're thinking the market's going to crash, the world's going to end, and what happened? It bounced right back. So you have to be on red alerts for at highs and potential lows, and that's where knowing swing points matter. And like here you go, just a little quick bear trap, boom, run you right back up. Gap down, boom. Bear trap, running you higher. And so that's the thing, and that's why when the trend's your friend, you're looking for the traps that will confirm bull and bear markets. Here you go, another trap, day down, 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 boom. The volume expands, you see it right here, and then we turn back around. Like those long wicks are like they're signals. Here again, down, long, little wick, higher volume, and then what happens? You gapped up, you held the 50-day, you're gonna go. I mean, these are examples of not people, but like the traps. That happen very easily at times to get people to jump in. And sometimes here's one that I thought was a bull trap, and it ended up just being a small retrace, and it came right back. I mean, we can pull through charts, and I'll do that just to show you gals and guys just like what it means. And so here's a trap. This is one of the things, I don't know, we talked about this if you watched revisit the videos. So this level here around 400, we made a higher high. This doji was very indecisive. I didn't like to see that. And then we had what happened? This long wick candle on expanding volume. It's like, of course we're now going to drop. Dropped and then chopped and then dropped and then chopped. But this was a red flag. So bulls jumped in. I remember in the morning there, because everybody was thinking the markets were going to go higher. And then it ended up failing. Let's go to that 1122. Okay, yeah, here you go. I mean, everybody was jumping in the AM, popping that thing up, and boom, pop. And again, that's a bearish signal to me. You should be worried about that. When you get after a big move, you got to be aware. Like, even if you take some profit, look what happens. Then you're okay, and you can kind of watch and see. But when these moves happen fast and you don't have a plan where you take some off and add back on, and you just all or nothing, you get left hoping that if this is a bull trap, that it isn't going to be that bad. And that's where trading over the years, that's like I said, that's why I don't really day trade a ton. And when I do, it's very obvious stuff, because I have seen where intraday, I think this is a bear trap or a bull trap, held and goes higher. And so I sit there and I can't put a ton of money on stuff because the probabilities just aren't necessarily in your favor. Because at this point, when you're riding, like, say, the 20 period moving average on the hourly, I mean, we've gone from 386 up to 400. I mean, it could be due for a 10, 15 point drop. That's what makes trading so hard, and why risking short term and gambling hard on the short term is just always going to put you at a potential loss if you're wrong. So that's why you trade smaller when you're day trading. All right, well, I hope this helps. Be on the lookout for traps. Again, think about them. The first direction is wrong. You usually see a reversal signal that'll follow, and then the action goes the other way. And keep in mind, like, the action, the bigger the trap, the bigger the extreme at the higher and the lows. Those are the little things I'd be looking for in traps. Hope that helps. Stop by the Discord room if you got questions, concerns, thoughts, ideas. Don't hesitate to ask. Thanks, guys. Yeah. For more trading knowledge and insight, click on the video links to the right. I appreciate you stopping by. Please subscribe, like, and share with your friends. And if you haven't joined the Discord room, check the link in the description below.